Hi everyone, happy Wednesday. It's Alysia here and I'm super excited to be with you live from San Francisco once again. We're incredibly fortunate to have spent this past weekend at the truly humbling Yosemite National Park, one of America's great treasures. And all I can say is how lucky we felt to be experiencing such incredible natural beauty. It's truly inspiring. We'll once again be sharing some photos on our community's Instagram account. This week, we've also seen the famous Y Combinator demo day, and as always, the best entrepreneurs Silicon Valley has to offer share their businesses with a star-studded audience of investors, celebrities, and royalties. Definitely not an event to be missed. Silicon Valley, the home of entrepreneurship and venture capital, it's only right that we do today's fireside chat on different types of funding available for you, our global community of entrepreneurs. Now, given all the excitement around the topic, and the fact we've had so many questions being sent through in advance and so many of you joining us today, let me go ahead and introduce our VIP guests before asking them to properly introduce themselves to you. Everyone just bear with us. We're having some technical difficulties and there seems to be a bad lag. Tel Aviv, Israel-based Johnny Rapp, who's a corporate attorney specializing in corporate, commercial, and securities law and transactions. Tanzania, Africa-based Bridget Forston, who's an entrepreneur, economic development advocate, and human development expert. California, USA-based Joshua Shepard, who is an equity crowdfunding specialist, advocate for democratized finance. Delhi, India-based Vijay Goyal, who's an entrepreneur, investor, strategist, mentor, and philanthropist. And Mumbai, India-based Dr. Akash Bhandari, who's a dentist, entrepreneur, and education specialist. Alberta, Canada-based Sarji Matu, who's an investment banker, entrepreneur, and product innovator. Would each of you please like to go ahead and quickly introduce yourselves to our community? Yoni, please go ahead.
Hi, everyone. It's great to be here and to join all of you. And thank you for this opportunity. My name is Yoni Raff. I'm a partner at a law firm in Tel Aviv, Israel, Gornitsky & Co., one of the largest and biggest law firms here. And I particularly am involved in cross-border M&A transactions, and particularly transactions representing investors from seed angel round all the way up to large VCs, as well as representing companies, founders in the startup system. So I'm happy to be here and to join all of you, and look forward to a very, very interesting session.
So much, Yoni. Very excited to have you join us. Joshua, please go ahead.
I've been working in the crowdfunding space for a little bit over 2.5 years now. I left Wells Fargo about 9 months ago to get the crowdfunding industry started. It's off to a slow start. And so now I'm working with Windmill. It's a marketing agency that traditionally has marketed public companies, but now they're working with crowdfunding companies that are raising capital. And then I'm also working with a stealth fintech startup that's aiming to solve some major issues in the crowdfunding space.
Thank you, Joshua. Very excited to have you join us. Sarji, please would you say hello to everyone?
Hello, everybody. My name is Sarji Matu, and I've been involved with syndicating large real estate deals in Canada, and had sales teams for about 12 years. And from that point of view, that was a very successful program that we ran there in terms of the business model. And then I switched over to the digital world and have got myself involved with generating and creating apps for the digital market. And that's what I've been involved with for the last 4 years.
Sarji, and from India, Vijay, please say hello to everyone.
Hello, everyone. Thanks, Alysia, for the wonderful conversation that we're having. I am the founder and director of a global B4B marketplace, Eximbaba, that's eximbaba.com. And earlier I had been into my family business of agriculture, food processing for the last 10 years. And I'm the angel investor investing in healthcare startups and food products businesses. Thank you.
BJ. Last but not least, Akash, please say hi to everyone.
And I would like to say that I'm very excited to be a part of this panel. And thanks, Alysia, for that. Founder of Edulocation. It's a startup in the edtech space where we are a search and discovery based platform for home tutors, private tutors, and coaching centers out here in India. And I am a practicing dentist as well. So that's about it.
Thank you, Akash, and welcome. Just before we jump into our questions, a few important shout outs. On the screen are contact details for our panelists. Please feel free to reach out to them. Don't forget to keep sending your questions through to inspireme@onlinefiresidechat.com, and we'll continue to try and include them. Given how many of you are joining us today, we have community champions managing the chat room, including our very own Dampatraj Dariwal from India. So if you have a question for one of our VIP guests, please post your question in the chat window and we'll make sure your question gets answered. Just a reminder, we have community champions and ever-growing meetup groups in various cities around the globe, including in North America, South America, UK, Europe, Africa, the Middle East, India, Asia, and Australia. The list is just getting too long, so we had to do a summary. If your local chapters would like to start your own, please reach out to us via email. We'll put you in contact with your local community champion. On that note, thank you to all our volunteer champions from around the globe. You're the heart and soul of our community, and we literally wouldn't be here today without you. Over the next few months, with all your help, we'll be sharing with and inspiring entrepreneurs in more than 100 countries across the globe. We know that together we can make this dream come true. Thanks again to our growing family of supporters and collaborators from around the developing world for once again hosting sessions for hundreds of entrepreneurs who don't have access to the necessary bandwidth or understanding of English language to join our sessions on their own. Ministries, UN offices, US Embassy corners, British Council offices, university campuses, schools, business incubators, Chamber of Commerce's, community centers, and radio stations to media for all your weekly hosting supports and for raising awareness within your regions and communities. Thank you to everyone from our UN Women team for all your support. Thanks to our champions who stream you across new live platforms once again. If you'd like to share us with your community and have a radio station you'd like us to broadcast from, please make sure to email us so we can continue to connect with new entrepreneurs and grow our Fireside Chat community into new communities around the world. So now the moment you've all been waiting for, let's jump in and start learning. Just so our panelists can get comfortable, we're going to be starting easy and then gradually increasing the intensity of our questions. I know there are a lot of community questions today, so let's start off easy. A question for all our panelists, and we'd love for you, Yoni, answers, and then we'll go from there. So, Yoni, question one, when should an entrepreneur consider looking for funding?
So I think it very much obviously depends on the needs of the business and how they plan to grow the business. Certain businesses can obviously be started self-funded, and once there's a product in place, can then go out to funding. There are other types of products that may need funding from the get-go in order to be able to move forward. I think the bigger question that people have to ask themselves is, who do I approach and when? Stage of the growth of a company, there are certain types of investors that the company or the founder should be looking for and speaking to. For example, if you have a wonderful idea and even a plan for implementation, but nothing more than that, going and trying to speak to VCs or other type of funds is probably premature and a waste of time. So it's important to know where you are in the process, what your needs are, both financially as well as the growth of the product. And then from there, it's certainly easier to map out how much and from who you're going to raise the funds.
Fantastic advice. Thank you, Yoni. And this question's for you, Josh, following up on where Yoni started us off. What are the different types of funding available based on your experience?
Is that in general or
In
for
general,
crowdfunding?
yes. So basically, across the board, what have you experienced in terms of different types of funding available?
Yeah, so entrepreneurs can typically, go to friends and family as the first place they look for money. If friends and family don't have money, they'll typically go to a bank or a large institution. After that, because banks typically don't approve most of the applications that come through, next I would say is VC and angels, and that's probably the hardest to get into if you don't have any money, because you typically will need proof of concept or an MVP of some sort. So then crowdfunding is the next best answer. I think it's a last resort for a lot of entrepreneurs, but it's also becoming the new form of capital acquisition for a lot of companies.
Thank you so much, Josh. And based on your experience, how quickly is the crowdfunding space growing globally?
Well, it's growing quite a bit. It's interesting because crowdfunding has been around in America since 2003 when ArtistShare first launched. And then 5 or 6 years later, Indiegogo and Kickstarter came online. And so it's interesting to see in a lot of other countries like in India and Tanzania, there's so many underdeveloped countries that are starting to really hop onto crowdfunding and use it to really kickstart their economy. I think it's awesome. Here in America, equity crowdfunding has actually been growing extremely slow in comparison to donation and reward, but it's definitely growing.
Thank you so much, Joshua. Very interesting insights. A question for Akash. You've been on a very interesting journey as far as being an entrepreneur goes, and you've largely self-funded and got your family from our discussions that we've had to help fund your idea. Nan, could you give us a bit more idea of your experience in terms of self-funding or bootstrapping, as you call it here in the US, and has it worked for you?
Thanks, Alysia. Thank you for that question. Yes, of course. Am I audible?
Please go ahead, Akash.
Yes. So bootstrapping was, I would say, in a way, it was difficult, but it is the way to go when you're starting your own business. You have to take help from your friends and family, and then only you can build up a business and then lead it to some kind of sustainability. And yes, that's kind of the way to go in the initial days. And my experience in bootstrapping was that sometimes it can be difficult, but when you get that goal which you have in mind, obviously you feel like when you connect the dots, you feel very happy about it. So that this is what I did, right? So yeah.
Thank you so much, Akash. And touching on what Yoni was saying earlier, as well as what you were saying, Akash, we have a question for you, Vijay. You're an angel investor. Based on your experience, when should entrepreneurs consider taking external funding?
I would want to answer that in regards to India. You see, the Indian government is promoting the businesses like anything. You talk about any sector, be it infra, be it healthcare, education, all are being promoted like anything. So I would want to invest in an aggregate model business, just like an e-commerce or something promoting medical tourism. So this is my answer to the Indian perspective.
Thank you, Vijay. Very interesting insights opening up our section today. So, Yoni, a question's already come through. You're an expert when it comes to funding and helping put the legal structures together. Could you please explain to us the difference between bootstrapping, angel investor funding, and venture capital funding?
So it's really just a question of the source of the funding and company. Generally bootstrapping or friends and family or very early stage seed funding is minimal funding at the beginning to get the company or the idea off the ground. And then each stage, as the company moves forward and requires greater resources, then sort of a next level of investor is usually approached, following that seed meeting with angel investors, and after that with larger VC funds, and going from there to to PEs or looking at actually at the capital markets. So as far as from a financial point of view, usually each type of investors is going to invest more money or larger investment rounds. Again, helping the company move forward to achieve its goals. From a legal standpoint, there's not necessarily a big difference between any of them. They can often be very similar, but generally, the more sophisticated the investor and the larger, the bigger the amount invested, will generally bring with it quite a number of limitations or terms that the investor would want included in the agreements between them and the company, such as veto rights or other restrictive rights. They may want to take control of the board. So it very much depends on who the investor is and what stage they're investing and the amount they're investing. But those things are often very much on negotiation or case-by-case basis.
So Yoni, you're very popular. Another question's quickly come through for you that everyone wants the answer to. Relative to what you were saying, can you explain the differences in terms between Series A, Series C, Series F? That's a short version, we promise.
Yeah, it's simply a linear way of calculating at what stage the money came in. The way it generally works is, in first out. So the last investors would usually be the first to get their money out. Certain protective or liquidation preferences, meaning again that when the company sells out, they would meet money first, the most recent investors. And if you do a round A investor, that would usually be your first big round with the VC or maybe a large angel investor that's putting in a significant amount of money and therefore would want or require certain and then after that, each additional round that has greater or different terms or limitations on the shares or the form of equity that you are investment would be the next round. So A, B, C, D, etc. And then within those rounds, obviously you can have this mini rounds. You would have A1 round, A2 round, etc. And then often is linked to, particularly when you're talking about common law, where you talk about shares and types of shares. So usually each round would be linked with the same type of shares. So if you do a Series A round, you would Series A preferred shares, and on get a sub round where it's being an A1 round, or as you said, the Series F shares would usually issue Series F preferred shares.
All our entrepreneurs get as far as building their businesses that they're taking Series F shares and they're listing on stock exchanges and doing brilliantly, because that means we're all succeeding. So a question for Saji. Thank you so much. You're most appreciated. Saji, you've had a very interesting journey. You've gone from playing investor to playing entrepreneur, and I'm sure you've had a very interesting experience in terms of that. What do our entrepreneurs need to know when it comes to taking funding from investors?
Well, I think there's always a statement that ends up with an anomaly or a contradiction. I think when you're talking about self-funding, and it has been stated here, it's highly rewarding. But there's a couple of examples of self-funding where you can comes to mind immediately would be the Quora. If people are familiar with Quora, where the community will pose a question and then the community will provide the answers for that. Now that was founded by some of the initial investors in Facebook, so they were able to control 100% of the company. They did not require outside financing, and they were in charge of all their decisions. On the other hand, so in other words, in that case, they were well heeled to begin with financially, and they were able to follow up with their own strategies without having any outside interference, had 100% control. On the other hand, bootstrapping it up without any money and relying on yourself to be able to do all the different functions, and as Yanni said, depending on what stage the commodity or the product is at, it can be very daunting because you're wearing all those hats at the same time. A good example of the complete opposite of a well-heeled corporation, which was Quora, would be if you go back to 2005, you look at Guitar Hero or Rock Guitar. Those two fellas, and by the way, you can see their interviews and their struggle of reaching financial success. They had to bootstrap that up and, were juggling monies all the way up. And then even when they had acceptance into the marketplace and the demand was there, they ran into another problem in the sense that they had a product that was bundled and packaged up in a way that didn't fit on the shelves. So they had to deal with a lot of issues as two brothers all the way up through the ladder. But of course, the reward is that they are completely in charge of the product line. And if you're going to go that route, and if you're a listener here and an entrepreneur, and you're not particularly well-heeled all the way through to realize unforeseen situations that are going to arise that you did not account for, you definitely have to have the you have to be strong and determined to make that thing go. But again, the reward is there for you. But it's bootstrapping it up is a lot of work if you're going to want to own 100% and make 100% of the decisions.
Thank you, Sarji. Very, very interesting insights, very interesting journey you've been on. This next question is for you, Josh. Following on what Sarji was saying, we've been talking about the advantages and disadvantages of self-funding, and I know you're hugely passionate about crowdfunding. In your opinion, how does crowdfunding help empower entrepreneurs to overcome some of the issues of self-funding?
So, first of all, I think the most important piece to that is when it comes to running a successful crowdfunding campaign, community is probably the most important aspect. When it comes to actually raising money, small amounts of money from a lot of different people, you really need them. You need to be in communication with them collectively and have them in order, really. So having a social presence with your organization that you're raising with is extremely important. I think crowdfunding is the way around if you can't do self-funding, because it allows your friends and family to essentially not only contribute towards your campaign, but they can also share that, and you can use other people's networks to essentially raise more funds. Aside from that, you also have you have an entire spectrum of crowdfunding here. So you have donation, reward, and equity crowdfunding. And so equity crowdfunding right now in America, at least, it's growing very slowly. It's still unproven. There haven't really been any clear principles that have been defined in the industry. And so reward crowdfunding continues to dominate in America. And so that's awesome because it not only allows equity crowdfunding to grow at a slow rate, which it really needs, but it allows entrepreneurs to still go to a platform where there's there's built-in community that they can bring their community to, and then from there raise money at a lower.
Thank you, Josh. Definitely going to be coming back to you, given how popular crowdfunding is and given how many entrepreneurs in our community want to pursue that path. You spoke about something very interesting in terms of friends and family and keeping your early stage investors and community happy. Akash, I know your family have been very supportive of your journey as an entrepreneur. Would you like to share some more in terms of keeping them up to date and in terms of your progress? And it can have its challenges having your family investing in your business early on.
Thanks, Alysia, for the question again. But sometimes it is difficult when your family has invested in your business. Obviously, they ask for progress and all that. And when you don't show anything that now, like 6 months back, I just spoke to my dad that right now what we are doing, Dad, is We are just making a software where our customers can just manage their business and all that. So here in India, I'm a Marwadi, and my dad also he doesn't understand the online business. So he's like, "Sab kuch ho gaya. It's okay. I know what is going on. Just tell me when are you getting the money." It is difficult sometimes when your friends and family have invested, and so yeah, it's not an easy journey. But yeah, so I just have to explain it to dad in a very convenient manner. So this is a process, and then only one day will come where we will be gaining some amount of revenue.
Thank you, Akash, for your honesty. I know it's a very challenging question, so we appreciate you answering it. So, Yoni, you get to see across the board because you see the good, bad, and ugly as a very successful attorney. But based on your experience, can you describe some of the most common mistakes or shortcomings that you've seen entrepreneurs make at the early stages that do have an adverse effect down the road? And how could our entrepreneurs avoid making these?
That's an important question, and one that often comes up. I think there are a number of things that need to be taken into account. One of the items that Sarji mentioned with respect to bootstrapping it yourself or bringing other people in, I think, is also sharing the risk and the burden. I'm sure he can attest to the fact that being an entrepreneur and starting a company from scratch is an extremely time-consuming and difficult and often tiresome job. And having other people assisting you, advising you, backing you is very important. And I think probably the most important group then is really the founders group. To start off on your own or to go it on your own is very difficult on the one hand. It's important that you have other people you can bounce ideas off or thoughts. And at the same time, most of the investors that I work with, one of the things they always tell me is they're investing less in the product itself. Of course, the product has to have a market, and they have to believe that there's a business need for it. But they invest in the team. They invest in the people. They invest in the people that they believe can bring their ideas and thoughts and dreams into real commercial fruition. So it's important when you're starting out to have a partner, to have partners that you work with. And the second part, together with that, is you make sure that your arrangements or your understandings between the partners is very clearly documented. Which could be by the way of a founder's agreement. It could be if you immediately incorporate a company in the company's charter documents, whatever they may be, depending on which country or jurisdiction you're in. But that's very important. As a lawyer, there are two phrases that probably scare most lawyers the most. And the first is, we don't need anything in writing because we have trust between us. And the other one is, we have an arrangement. Both of those are obviously very scary, and they can lead into a lot of heartache, to a lot of disputes later on. And as a lawyer, my advice is always, particularly the closer the partners are, the more important it is that all the terms, all the agreements and arrangements between the partners are very clearly written down, so that there can be no misinterpretation or misunderstanding. So that's very important. And part of our project together, it's not always the case that the founders, that the partners stay together throughout the duration of the journey. And so when setting off and when structuring the arrangements between the partners, it's important that there is a way out, in the sense that if you, for example, you were three partners starting together, if after a year one of the partners is not pulling their weight, is not involved or wants to leave, you're not stuck with a partner in the company that still has all the equity or beneficial rights they had, even though they're not playing their part. So it's important that there is some sort of reverse vesting. There's some sort of way that began together, the partners or the people that stay on throughout the process and the journey of the company are rewarded accordingly.
Thank you, Yoni, for addressing this. In full disclosure, I'm very sensitive to everything you've said because we've had some bad experiences, and I wish everything had been documented at those times. So to all our entrepreneurs, everything that Yoni is saying, to write it down and to practice it, because when you start out, it does seem like a honeymoon. I'm sure Yoni would agree with this, but when things go wrong, it's a huge mess to try and fix. So just keep writing everything down, keep making sure that you can keep track of everything. So if something does go wrong, you can go back and you can solve it a lot more easily than if you hadn't written it down. Yoni, would you agree with that advice?
Most definitely.
Thank you so much. So a question.
I won't say that I don't have, there's no advantage to me saying that you need to speak to a lawyer and have things written down. But I definitely do believe that it solves a lot of issues that may arise in the future.
Very good advice for our attorney. So thank you. Most appreciated, Yoni. Vijay, based on what Yoni was saying, he touched on some very interesting and important points in terms of sharing the burden as far as partners go and investors looking to invest in the right team. Each of these things is critically important. As far as you being an investor goes, what do you look for when you are deciding to invest in a company or not?
First of all, I look at the intentions of the founders. The intentions of the founders should be they should be passionate towards what they do. They should be truthful to yourself, to themselves, and towards the enterprise that they want to build. So these are the two foremost things that I see before investing in any of the enterprises.
Thank you, Vijay. Now, following up from that, Vijay, Josh, what, in your experience, what drives people investing in crowdfunding campaigns to help support entrepreneurs achieve their dreams?
Community is the number one driver when it comes to a successful crowdfunding campaign. If you don't have a group of people that truly believe in you and are willing to help spread the word, most of the time your crowdfunding campaign is going to be very unsuccessful. So building that core group, that core team of backers is extremely important. So I think that's the main driver to crowdfunding. Also, just having a business plan. It's amazing how many of mostly reward crowdfunding project creators, but most of them don't have really an idea of what they're doing with their company. It's kind of like, oh, this is a creative project of mine, or this is, my dream. And they're more creatives than business people. So I think community and a well-written plan is extremely important to successful crowdfunding.
Josh, you've touched on some very interesting points and the questions are flying through. So based on what you were saying, what are the most successful crowdfunding campaigns you've seen work, and any tips in terms of our entrepreneurs' do's and don'ts when it comes to doing crowdfunding campaigns?
The Coolest Cooler blew up. One of the largest crowdfunding campaigns to date. And so they did everything well. They did everything extremely well. That's why they're such a success. I think they raised $13 million, was it? Yeah, $13 million. And so what happened was the Coolest Cooler didn't have a built-out plan, or they may have, but they didn't have a contingency plan. They weren't ready for $13 million. And so what ended up happening to them, they were a wild success, 62,000 backers, $13 million. They fell short of actually delivering the Coolest Cooler. So those 62,000 customers of theirs, that community that they created and brought together, they had essentially let that community down because they weren't prepared to fulfill the expectation of their community, and that they had essentially told their community that they would fulfill. And so I would say keeping your promise as an entrepreneur, as a business owner, following through with it is definitely important, because if you let the crowd down, then it's hard to go back to the crowd for anything else. If say, you recovered from that $5 million deficit and wanted to continue growing as a business a couple of years later, it's hard to go back to that same core group of people, and they may not be as loyal. So I think a business plan is extremely important when going into this, and just knowing that you have an entire community not to let down and that supports you.
Thank you, Josh. Now, a very interesting question that's come up is, what is the maximum amount of money that an entrepreneur should be trying to raise via crowdfunding versus going angel investing or even further venture capital investing? Is there a cap at which you'd suggest them considering other funding options?
Necessarily say there's a cap. Well, I guess, sorry, I take that back. There's a cap. You really shouldn't go into crowdfunding shooting to aim really anything over $1 million right now, especially reward-based crowdfunding. Reward-based crowdfunding, anyone that raises over $1 million is usually a consumer-facing good that goes viral. And so that virality kind of catches on, and it continues to pick up momentum, and it ends up getting into the millions. But right now, in equity crowdfunding for regulation CF, regulation crowdfunding, that allows an entrepreneur to raise up to $1 million within a 12-month period. Even though they're allowed to raise up to $1 million within that 12-month period, right now, there's 95 active Reg CF, and their average target is only $110,000, which is interesting. Because it costs about $40,000 to actually get a Reg CF equity crowdfunding campaign up and going. So right now, crowdfunding, as far as equity and debt goes, it's hard for an entrepreneur to raise much more than a couple $100,000. And reward, you're really going to have a viral campaign to. And
Thank you, Josh. Thank you so much. So, Sarji, you've had a very interesting journey, as I say, transitioning from investor to an entrepreneur. You mentioned earlier that you'd raised $300,000 in funding. Could you tell us more about your experience, the good, the bad, and of course the ugly?
Yeah, we had seed investors take a look at my data and the business plan and the due diligence and financial projections that we were looking at. And from there, that group basically, we were able to garner, 10 units of investment, and in total combination for that seed, it amounted to $325,000 US. So that was how I did that. But just to carry on a little bit about the crowdfunding, I think thing with crowdfunding is that on paper, it is an extremely attractive vehicle for an entrepreneur to delve into and explore for himself as an option. You have a situation where people are willing to micro financial bits participate in gathering up the funds that you require. And they do that, it seems to me, psychologically, because they feel the passion that person has for his particular product. And they themselves, as investors or as persons who have donated money to that cause, they have a feeling of inclusion to that product. They've helped that along. And so I think that's a very highly versatile kind of motivating factor towards donating money where you do not have any participatory ownership. On the other hand, Coolest Cooler can cool that whole phenomenon because they did not produce what they said they would produce. And that could have ramifications to the social networking of people who have donated money and then posted their disappointment. So that can cool that off quite a bit. That it takes time to put that campaign together and to manage. So it might take you 2 to 3 months to put the campaign together, and then on an ongoing basis, another 2 months while you're trying to raise those funds. And of course, if you don't hit those targets, that money goes back to those investors, it gets redistributed, and now you're out 4 or 5 months. So that's a problem. And then as you get your campaign ready to go, the crowdfunding people will suggest to you that it would be helpful to gain traction by getting 30% of the funds through your family and friends. So, for example, if you're looking for, on the median average of $100,000, then you would be looking to, based on their recommendation, to come up with $30,000. The problem with that is that you've probably taken this product and gotten it to this point in some cases, and of course, there's always the opposite argument. But in some cases, in many cases, you have a product already subscribed to by your family and friends, and now you're being asked to go back to them without any increased share value or any increased percentage ownership to get to that $30,000 to be able to create the traction to attract people that you don't know. So that's the negative side. But certainly, crowdfunding has big time potential, I think, from just on the first initial point that I made, which is that people like to be included and think that they have contributed to something that's worthwhile by an entrepreneur who presents a campaign of passion and a product that's worthwhile.
Fantastic advice. Thank you, Sarji. Joshua, would you like to add anything to what Sarji was saying?
I thought that was great. Sarji, you really touched up upon really the basics, the core basics of crowdfunding, and you made some good points about the coolest cooler. Part of me is actually really afraid that this industry is in danger of extinction in a sense, the equity side, because the coolest cooler, stuff like that. Sarji's right. It really does cool the phenomenon off when 62,000 people don't get what they're promised, and some of them put a lot of money into it. So passion in entrepreneurs, being part of the experience and inclusion, that's what crowdfunding is all about. I love it.
A quick question for you, Joshua, that just came through. How do you create a viral campaign when it comes to crowdfunding? Just 1 or 2 points you could share with our community?
Yeah, virality, that's interesting because it's you can, or that I've found that you can calculate. Really having the plan, the structure, the infrastructure of your crowdfunding campaign built out is probably the most important thing. Having updates and social media posts to update your crowd, and it takes a very good video, I think, point that I would make. Video is, when it comes to social media algorithms, it's favored, and so a video will definitely help entrepreneurs go viral, as well as that structured plan.
Thank you, Joshua. Following on from what you and Sarji were saying, this question is for you, Yoni, and of course we'd like to hear Akash and Vijay's thoughts on this too. But starting with you, Yoni, what has been your experience in regards to obtaining business funding from the US versus other countries?
So I think it very much depends. Where in the US, obviously, if you talk about Silicon Valley, that is the largest startup ecosystem in the world, and you have a lot of sophisticated investors, be it angel investors or obviously financial institutions, VCs, and the like. So it very much depends where in the world, and also there are many places that have niche specialties. Countries that focus, or cities that focus on certain types of startup innovation, be it in cyber or data or anything of that sort. So very much depends. Israel, for example, which is obviously where I'm involved, is a very unique ecosystem. It's the largest ecosystem outside of Silicon Valley, which is quite impressive for such a small country. And actually, there's the per capita, the most amount of venture capital invested which is in Israel. The per capita around the world, the most is here in Israel. And it's a very open and very investor and startup friendly system. In fact, there's a number of years ago, I think it was about 2 years ago, one of the principals, one of the founders at a VC here in Israel called Aleph, a guy by the name of Eden Shochat, he posted a Google spreadsheet with a list of all the angel investors that he knew, including their phone numbers, the email addresses, etc. And since then, it's gone relatively viral. And there are a number of these spreadsheets around the world for London, for the US, which allows startups, founders, entrepreneurs that want to have access to financing to be able to contact from the early seed stage investment to people who would be investing $50,000 to $100,000 at a time, up to the big VCs, which are investing millions. So it very much depends where you are, but there are a lot of ecosystems. There are a lot of places that are very open and very. There's a lot of financing available if done in the right way. Just as far as crowdfunding goes, I just want to note that there is, besides all the Kickstarter and Indigo type of funding, there are equity crowdfunding platforms where the platform itself does the fundraising for the company. So they would interview and they would take in a certain number at a time of startup companies, and then they themselves will run the campaign and they would raise the funds from their investor pool. One of the biggest is one of the most well-known here in Israel, and they're active also in the US, is Our Crowd. Raised and invested over about $100 million. So there is certainly crowdfunding which is being done in a slightly different way, which helps and works with the investor. There are obviously downsides. They take a bigger piece of equity, and they may be a bit more involved on the day-to-day basis than a general community, which are simply putting in small amounts of money and hoping that something will come of it in the future. So there are pros and cons of both ways. But the Our Crowd, the crowdfunding platform, there are other ways to do the crowdfunding, which assists the early stage companies that don't have the resources and abilities to do a full campaign on the likes of Kickstarter.
Insights, Yoni, thank you. Do you have any interesting case studies that you know of from Our Crowd that you could share with us?
Sorry, can you repeat that?
Do you know of any interesting case studies from Our Crowd that particularly stand out for you that you could share with us?
So so there one or two. I should note they are a client of mine, so I don't necessarily work with them, but I do know of them and of their work. They invested, I know, in a company called Rewalk, which I think is called Rewalk. I stand to be corrected, but that sort of an exoskeleton for people that are not able to walk. And I think it was about 2 years ago they had an IPO on the NASDAQ. They were one of the original investors in Mobileye, which was last year or 2 years ago, which was largest. The largest Israeli IPO in the US, I think it was around $1 billion. And most recently, Mobileye was bought by Intel. It was just publicized last week. It was bought for $15 billion. So they certainly have had some success. I know they probably invested in over 100 companies. So I can't speak for them as far as an investor in Our Crowd, whether what the benefits are and what their success rate is. But as for entrepreneurs that are looking to ways to be financed, that type of financing vehicle could be positive. As I say, they have raised funds for over 100 companies. So they certainly, for that side of the business, they're certainly a positive force in the field. But there are many other ways to do it. As I mentioned, there's a spreadsheet, where you can have access to small investors all the way up to large investors.
Thank you, Yoni. Absolutely phenomenal insights. Thank you for sharing. Vijay, following up on what Yoni was saying, what has been your experience in regards to companies, startups in India obtaining funding?
So if I talk about funding in India, it has always been that, India is a great market owing to its population, because anything sells over here. You don't have to look for the market. So finding a good mentor is one thing, and then the best thing is to have to get the funding from the Silicon Valley. This is what I suppose is the best method to go for funding for the Indian startups.
Do a lot of Indian startups get funding from Silicon Valley?
The great startups do. Not many startups.
Very interesting. Thank you so much. So, Sarji, a question that's just come through for you. Based on your experience, both as an investor and an entrepreneur, knowing what you know today, just the equity sharing should be for founders for $100,000 investment in a startup.
I'm sorry, I missed the last part. The equity sharing percentage,
Yes,
did you say?
Yes. So based on your experience, both as an investor as well as an entrepreneur, so you get to see it from both sides, what would you suggest as a fair and equitable sharing of equity for $100,000 investment in a startup?
Oh, Alysia, I think that would be very hard to answer because, valuations, not only are they subjective, but they vary from how much money is done in the seed round from family and friends, and what the $100,000 would represent as compared to the seed round. Talking, say, a Series A, that would be much more difficult to be able to say, well, that should be 10%. Well, 10% of what? What does the $100,000 represent? Where does it take the company? What's the timeline, etc.? I think from the point of view of the listeners as entrepreneurs, if you were looking at going the VC route with venture capital, there's two sides to the story. And of course, if you're looking from an entrepreneur's point of view, you want to take a very careful look at the portfolio within that capital firm to see if there's some kind of fit for your particular product. And then if there is a fit, you want to go backtrack to the actual person who was that entrepreneur that got financed. And in many cases, you can actually talk to him, or you can find his experience written up on that website of that capital firm. And that will give you tremendous insight, but not to just leave it there, but look at that product as if it was your own product and how you would pitch it. And look at whatever information you can gather as how he pitched it, and what was the tipping point, what were the parts that he was deficient in, and that the company could complement and make up for, and when he finally received the funding. That would be really important from an entrepreneur's point of view, rather than just simply going out there. On the other hand, if you're the investment firm, those partners that are there are all experts in their particular area, and the investments they make will reflect that. So and they're also responsible to each other. And even outside, if there's $100 million in that firm, and there's another $50 to $100 million coming from outside, those investment partners are responsible to each other, and they have to make some money. So they have a very stringent set of due diligence that an entrepreneur has to work his way through. And of course, Yanni has touched on that. And, they have the same bell curve that an individual entrepreneur or an individual investor would have, which is risk reward. Where is that axiom point? And that risk reward is tied into the timeline, financial projections, and it's tied into your team. Like, can this team deliver when we've looked at their resumes? Can they deliver what they're saying? Because the guy that takes the lead for that investment firm usually is going to sit on your board. What you're doing, they'll have a clause in there that they can remove you. That happened to Cisco. They said, husband and wife team started in their garage. They were lifted out and had to cash out. So then if they do put money in there, they want to make sure that team stays together. So there'll be clauses in there that increase of shares that you've now received, it's going to be held up in escrow for a number of years so that we know that you are absolutely committed. So the due diligence that's done by VCs towards an entrepreneur is very, very, very detailed, but at the same time, they can complement the lack of expertise that you may have as an entrepreneur in a particular part of your product line. It could be the marketing, or it could be, it could be any one of the things of that product that you may not have covered 100%, or, and you can get that complimentary instruction or direction or advice from that firm itself.
Thank you, Sarji. Fantastic advice. Really appreciate it. Now we're going to ask all our panelists to prepare their tweet of advice. We're going to ask them to come. We're going to come back to them and ask them for it, so that you can all go and apply what you've learned today in your businesses. Thanks to everyone for this truly amazing session. Just to keep you posted on our upcoming sessions with some of the world's best joining us again as panelists. Here are some of our awesome sessions coming up. Next week, March 29th, we have our super inspiring investor panel. What makes you tick as an investor when it comes to investing companies? And we have a surprise company pitching to our panelists. We have some supremely successful investors joining us, so you definitely don't want to miss that one. On April 5th, we've got what are the most important things you need to know when hiring top talent for your business. Again, we've got some awesome panelists joining us. On April 12th, what is more important for your business, high revenue or high profit? And on April 19th, what money habits do you need to get serious about your prosperity as a business owner? Remember to keep us up to date on all your progress and your exciting news. We know, we love hearing from you, and we love highlighting your success. We've got some extraordinary WhatsApp groups running, founded by a lot of our awesome champions. We've got for your specific global WhatsApp groups, so feel free to email us at inspireme@onlinefiresidechat.com, and we'll make sure to invite you. You can find me as well as our panelists and our champions on LinkedIn, so feel free to connect with us. Don't forget, keep sharing the sessions and invite people who you believe can benefit from our fireside chats. Remember, we want to go to 100 countries this year, and with your help, we can get it right. Now we're going to ask all our panelists to please give us their tweet of advice, starting with Yoni. Yoni, please go ahead and give us your tweet of advice.
No pressure, right? Yeah, I would say don't be shy to ask for advice from investors. I think anyone starting out on a new path, you can't do it on your own. There are people out there that can help you take advantage of their knowledge and expertise and experience.
Thank you, Yoni. Sarji, please go for it. Give us your advice.
Say that if you're an entrepreneur and you've worked on a product, you're probably very, very closely associated to it. You're attached to it emotionally. And I think that you want to constantly look for outside opinions about your particular product, and be open to contrary judgments or opinions or direction from which you may have started to think, this is the way I want to go, and somebody comes along and tells you something differently. You have to take that into consideration with an open mind and an open lens. You cannot be so emotionally attached to your product that you discount favorable opinions.
Sorry, we're just running out of time. Sorry. Josh, your tweet. Did we lose Josh? Josh, your tweet.
Sorry. Then the first four, sharpening the axe. That's by Abraham Lincoln. I say as an entrepreneur, really go out there and make sure you dive deep into the planning. Make sure that you have all your ducks covered.
Thank you, Josh. Akash, please go for it.
I would just like to tell all of my fellow entrepreneurs that if you're starting a business, you have to be a painkiller rather than a vitamin pill. Okay.
Very good advice. Very, very good advice. Thank you, Akash. VJ, your advice.
Yeah, I would say that it's the number one is that the entrepreneur should be passionate about his business, about his enterprise. Second thing is the business plan itself. It should be great, and getting information from the people outside is the third thing that is very much required to run a successful enterprise.
Thank you, VJ. Thanks again to everyone. We're going to say on 3, 2, 1, we're going to ask our panelists to all shout bye. We hope you have a truly amazing week. As all our experts would tell you, remember to keep hustling and never give up. So panelists, on the count of 3, 2, 1, please shout bye. Bye,
Bye, everyone.
Bye,
everyone.
Bye.
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 Bye.